What's up everyone, my name is Anthony and in this video I'm going to do a quick recap of what's been going on in the markets and dive into some specific technical analysis and wave counts for what I see for price action occurring over the past couple of days or so and what I predict is going to happen over the next few trading days. So first of all, we're in the S&P 500 and overall we're looking at the SPY, which is a reflection of the S&P 500. So overall the wave count that we're focusing on mainly is in gold and yellow right here. And just for background information, we're in this impulsive wave forming on this index right here. So wave 1 up, wave 2 down, wave 3 up, wave 4 complex correction, and now we're in this wave 5 working to complete the bull market run since the COVID drop. So we're focused on this wave 5, and now within this wave 5 we can subdivide the count into this golden yellow count. And this is where there's been a lot of complicated price action over the past couple of days. And as you can see, over yesterday and today, we've had this kind of drop and then pump right back up, so forming this really weird V shape. And this is what I want to talk about in this video. So to back up a little bit, we're coming up for a wave 1, down for a wave 2, and it looks like we're forming some kind of expanding ending diagonal. But however, this rapid increase right here that we've seen in the markets is a bit concerning. So I want to draw out some fib retracements and show you kind of where we stand where we stand on that right now. So if I take the top of this wave 3 and drag it down to this bottom, we can see we're hovering right around now the 0.886 levels right here. And we did get a rejection at those levels so far, but just the fact that we got up to this level is a little bit sketchy, honestly. So I'm keeping close track of what's going on. For example, if we do see a completion of this wave 4, we will see some kind of ABC pattern. So as I said in the last video, every single structure of an ending expanding diagonal needs to be some three-wave structure. And these three-wave structures are either complex corrections, which are WXY waves, or zigzags. So actually, there cannot really be a flat correction, or there's usually not a flat correction within fourth waves in expanding ending diagonals. So this means you wouldn't really expect to see some sort of like movement like this up here and then all the way back down. This would not really be valid for this structure. There's nothing really saying that it can't happen, but you don't really see this for the structure. So if it gets up to these levels, I'm gonna start to have to propose some alternate counts, and I do have that for this video, so I'll bring those up here. And then if we do come down to this level, we can expect that push up for that wave 5 and a 3-wave move up to here, and then we crash down for the bear markets in the summertime. So I want to propose an alternate count to this. All we're doing is just slightly changing what's happening right now within the past couple of days and labeling it differently. Overall, the broader term time frame in the end will get the same thing. So we're going to come up to these levels somewhere around the 430, 440 area, and then we're going to come down for the bear markets. The real question is just what's going to happen in the meantime over the next couple of days or so. So the first alternate count I want to propose is that instead of having our wave 1 start here and instead of having this regular ending diagonal formation, we actually move the wave 1 to this zone right here, the wave 2 to this area right here, and now we're working on a wave 3 upwards, and we can ignore this upper trend line essentially. We can still have it and just to keep mind of, but we don't really have to pay much attention to it. And then a wave 4, so we just have a simple impulsive wave to the upside. So I have mentioned this count in previous videos, but since we had some very choppy price action, this forced us to label this wave 2 as a complex correction. So that would mean that, so over here, if we dissect this count, we have a wave 1, 2, 3, 4, 5 upwards to form that wave 1 in gold and yellow. Then we have a huge complex correction, so a W, X, Y wave. And within this W wave, we have that WXY. This Y wave is just a simple ABC. And then this Y wave right here would form kind of zigzag structure, so ABC. So we have a W, X, Y for a second wave. And then now we're starting this third wave to the upside, and we're just going to have eventually hit these price targets up here. And right now we're in that midst of that third wave. So the reason why I do not like this count as much is a simple fact that over here, if we see this upside, this is non-impulsive. So I'm looking at this upside right here. This looks to me just like a simple short squeeze. And I'm going to talk a little bit about the Fed meeting today. So Jerome Powell did give some information about COVID and how the federal government was reacting to just stimulus and inflation. And there's a lot of bearish points being made by a bunch of governors and policymakers. And Jerome Powell really didn't answer them. He kind of just dodged all the questions about inflation. And there's some very valid points being made about how inflation is pretty bad right now. and the market just kept pushing up. So that's a little bit concerning. Instead of, especially if you're thinking about taking a bullish position at this point, it's a little bit hard to do that, especially with all that bad news and bad ideas coming from that meeting. So I really prefer to be bearish in this situation, especially if we do come down. So if we really move it back to my original account, so just simply switching these up a little bit, and this wave 3 up here, and then our wave 4 somewhere down here. So what would happen in the situation that I mentioned first, so scenario 1, we would reverse here and then come down for that wave 4. We would need to touch some zones around here. I can show you exactly where we would need to touch in order for this to be valid. So we take over here the length of wave 2, so right down there, take the extension up to the top of wave 3, and for an expanding ending diagonal, we need to at least hit the 413 zone, which is the 1-to-1 extension of this wave 2. So that just means 413 is the area where the length of wave 4 equals the length of wave 2. And this is a requirement for ending expanding diagonals. Each subsequent wave needs to be larger than the previous one. So wave 4 needs to be larger than wave 2, and wave 3 needs to be larger than wave 1, and similarly wave 5 needs to be larger than wave 3. So as you can see, if we do come down to these levels and we are in an expanding ending diagonal, then we will push upwards very heavily for that wave 5 and hit these price targets before crashing down into the bear markets. So currently, this count has not been invalidated yet. It's already, the reason why I'm mentioning alternate counts is because we have gone into pretty high territories in terms of fib retracements, and this does worry me a little bit, but a little bit of affirmation is that this structure right here is definitely not impulsive, because we cannot, if we're starting a wave 3 right here, say we're starting it in golden yellow, we need to see some sort of 1, 2, 3, 4, 5 move to the upside, so some sort of like 1, 2, 3, 4, 5, but so far we have no evidence of that. And even if this is our wave 1, such as this, our wave 1 also needs to be impulsive, and this structure right here has no impulsive structure at all. There are no significant pullbacks to form some kind of impulse wave. You would expect to see something like maybe like that for a wave 1, especially if we're going straight up. We don't see that here. We only see kind of like very minor sideways consolidations, and these don't really look to me like impulsive moves at all. And even if we go down to a very small time frame, like the 3-minute chart, there still isn't that impulsive structure to this. This to me looks like some kind of B wave, failed impulse wave, some very weak three wave move structure. And so the reason why I want to mention these alternate counts is because I'm watching very closely tomorrow to see what the true market reaction to the news is. So if we push up and pump up tomorrow very heavily, like so if we just push up to these levels, then I will start considering the alternate counts that I mentioned, and then we could maybe switch to a bullish position. But as of now, this non-impulsive move just looks like kind of a fake reaction to the news, in my opinion, because there's a lot of bearish things being presented about inflation. So also just to mention, in the past week, we did have a Fed meeting, and what happened was during the day of the Fed meeting, the market rallied a little bit, like as you can see here. The market rallied pretty significantly, actually, and the next day, it hard crashed right here. So it dropped around 1.5 to 2%. So I'm not saying that's going to happen again, but just to keep in mind that the market reaction to the news does not necessarily occur on the same day of the news. So I'm going to keep that in mind and see what happens tomorrow. And I'll keep you updated in the Discord as well as here in the YouTube. So that's going to be just an alternate count for the indexes as of now. That's what I'm seeing right now. So either a simple ending expanding diagonal forming here and we're coming down for a fourth wave, or we do have a true impulsive wave where we move the wave 1 up here and the wave 2 down here, and now we're working on that wave 3 to the upside. So that's just what I'm seeing right now. And either way, we should come up to these levels right here and then start the bear markets sometime in July to August. So nothing has changed about that. All we're doing is just trying to see what's happening right now over the next couple of days. So that's going to be for S&P 500. We'll go to NASDAQ next. So NASDAQ, everything looks good from the wave count that we mentioned in the past videos. We do have some kind of true impulsive wave forming. I mentioned how the structure of the impulse, as you can see here, doesn't look as impulsive as you would expect, but it does meet the criteria. So it does qualify. So I mentioned that we have a wave 1, 2, 3, 4, 5 upwards. And again, just like in S&P 500, we do have a bunch of nested wave 5s forming. And we would also expect the top of this tech sector bull market to be somewhere in July and August, along with S&P 500. And then we would start the bear market crash somewhere in this zone after we finish hitting some of the upper price targets. maybe around 350 to 360, something like that. But for now, we're working on that impulsive wave 3 upwards, and we're entering a very heavy risk zone around this blue rectangle. So these are just simple extensions of the wave 1 down to the bottom of wave 2, and you can do it like this. So you take this bottom up to the top of wave 1, down to the bottom of wave 2, and there are all your price targets. So this area is very high risk. I would not take on a bullish position at the moment in NASDAQ because we have already entered some pretty risky areas of a high chance of reversal for a fourth wave. We could target a fifth wave upwards, but for now, because the NASDAQ doesn't look as impulsive as I want it to be, especially with this very choppy kind of grind upward. I know we're going up, but there's a lot of chop within the middle, and this makes it a little bit hard to make profits. So I'm just keeping this in mind, but I'm not actually taking any trades on this sector right now. I'm mainly focused on the S&P 500. So that's going to be just my opinion about the triple Qs and SPY. And just to keep this in mind, I want to bring up the VIX, which is the fear index of the just the general stock markets. So if we go down to the daily time frame over here and we look at what's going on, we can see that we're actually hovering right above some heavy support around 16.55. So this is marked by the blue line, and this has been previous support recently, and we should get some kind of bounce at these levels. As you can see here, every time we've kind of gone through 16, that area 16.5, we've either, if we bounce initially off of it and then fall through it, or we just sort of have a bounce and we don't recover from it. For example, right here, we see we fell down to the 16.5 area, and then we bounced very heavily off of it right there and formed that kind of harsh V-shaped pattern. So obviously that's not necessarily what's going to happen again, but I just want to bring up that we are getting close to that level. So if we do see some sort of bounce here, now is the time for that to happen. And as you know, when there is a bounce in the VIX, that means fear is increasing in the markets, and this very commonly means that markets are going down. So VIX goes up, markets typically go down. So just to keep that in mind, if we do see some kind of reversal on the SPY like this, and we head downwards for that wave 4, we would expect VIX to similarly head upwards. And so we can see some correlation there. But tomorrow is going to be a pretty important day. I'm going to be watching very closely to see what happens on SPY. And if we do get close to these levels, some all-time highs, if we do push upwards to that, I'm going to have to start reconsidering what positions we should be taking on this index. Because that means we're possibly entering a wave 3, and that means there's some upside left to the market. Although it is a little bit difficult for me to take on a bullish position, hearing all the bearish news coming from that Fed meeting. So yeah, that's going to be it for this video. I'll keep everyone updated with what's going on in the Discord, and I'll post updates on YouTube as appropriate. And thank you so much for watching, and I'll see you in the next video.